Hey Abby, how are you doing?
Good. How are you?
Oh, doing much better, thank you. It's
Was
not,
it COVID?
no, no, no,
Oh, good. Good to hear.
no. I thought the professor that taught, no, it was not COVID. Of course, they tested me for it, but I was COVID negative. So, no,
Mhm.
it was. I have an infection in my. I've lost 9 pounds since the last time y'all seen me. That's how sick I've been.
Wow.
No, it's been,
That's terrible.
yeah, it's. But anyway, I'm on the mend and. So glad to be back in the classroom.
Good to hear.
I talked with Professor Goodwin, and he had y'all work that worksheet that I had ready to work in class.
Hmm.
And so, talking with him, I get the sense, like today, what are your expectations? Not just you, but did you get a sense of where the class was?
Well, he didn't do so much like teaching and explaining as just like put us in the breakout groups. And I don't know about all the groups, but my group was, for the most part, pretty confused. Um, and we like weren't able to finish in time. But
Y'all were confused with the different adjusting entries or the Excel
yeah,
part?
mostly how it was laid out. Um, like those three columns, it's not normally like that, right?
Yeah, you're talking about the worksheet?
Yeah.
Yeah, where you've got an unadjusted trial balance, then the adjusting entries, then the adjusted trial balance.
No, I don't mean the three separate worksheets, just it's alone on the first worksheet, how it's in those, you've got let me pull it up. You've got the three separate things, debit and credit for each.
Yeah, yeah, that's a typical worksheet.
Oh, okay. I guess I just didn't remember it to look like that, but
Because what I'm planning on doing, how did you feel that they were with, that y'all are as a class? And I'll talk with everybody about adjusting journal entries, whether they debit the permanent account or the nominal account, the temporary account. Like if
yeah, I
you
can't speak for everyone, but I definitely need like more review on it.
okay,
But
that's
Alex has been like helping that assignment.
yeah, Alex great. I mean, it's a pain going through it, but
It's yeah, it's very long. But so I had a question about that too. Once you get like the full pie complete, do you
you're,
also then have to do that last final knowledge check?
I don't think so. I think once the pie is complete, you're good.
Okay, because it just didn't look like the assignment was done. It looks like it's still like waiting. So I didn't know like if there would be something that says like assignment complete or
Yeah,
like,
no, if the pie is complete, you should be done. Um, it should be done if the pie is complete. So I'll check and make sure. I mean, if the pie is complete, you're good.
okay, well, yeah, the pie is filled out completely, but I've got like mastered, I think like 49, learning like more. So you have to master every single one or just,
No, and don't worry. I'll just check it out. Don't
okay.
just breathe about it because it was due last. Oh no,
No, it's due
tonight. Okay,
tonight.
after class, I'll go in and take a look.
Okay,
Um, do me a favor, send me an email, um,
okay.
Abby, and no, you don't have to do that. I'll remember right after class to take a look.
Okay, I can stay on after and just remind you one more time.
Yeah, okay. I'll be fine though because I know it's due tonight at 11:59, and so I want the
Okay,
whole class to know. So I'll be fine. I'll remember in that short period of time.
okay.
So what I plan on doing then is just we'll kind of work another problem. I've got it in my head of what we're going to do today then. Because I had a feeling y'all were going to need help with those adjusting journal entries, because that's usually the more difficult part. Hello, everyone. I'm back. I've been on a hell of a diet, losing weight. Not the way to do it, but okay. Don't forget, webcams need to be on, And I also had to implement a rule. It doesn't affect, I haven't seen it in this class, but in my, I've had students come to class with no shirt on, like laying in the bed with no shirt on. I'm like, no. Y'all miss me? I missed y'all. I tell you, the email that went out about class being canceled, my husband, somehow or another, I talked him through how to log in on my computer and
Are you
send out.
feeling better now?
Yes, I am. My body is, I just feel weak, after I've lost 9 pounds. So that's the kind of illness it was.
Well, it's good to hear.
Yeah, I was pretty sick, and I've got to follow up with another doctor now, obviously with a GI specialist. And my husband's been trying to call because I've been teaching all day today, and like November, January, and I'm like, oh, I can't get that sick again in the meantime. So y'all got exposed to intermediate accounting on steroids, huh? And we'll do it again on steroids again today. Because remember, this is a review of a prerequisite for this class, right? With just a little bit of intermediate. Hi, everyone. We will be referring to Blackboard. So if you can get in Blackboard up, I've got another template up like the one that Professor Goodwin did. I had actually had that one up and ready to go for class because I got sick about 2:30 in the morning. And then my husband had to get me to the hospital. It wasn't pretty. I miss y'all. It's so good seeing y'all. And so you'll see that I've got a template for the other one that I wrote that y'all did, Colby sailing or whatever it was. And today we'll go through a similar problem, but it's going to be an end of chapter problem, problem 2.8. So once everyone gets in, it's 2 o'clock. I'm admitting students now into the room. Should be getting pretty full. We'll go over what my plan is today to finish chapter 2, and just to make sure that we're all on the same page and what would be the best way. If what I had planned is going to be what the best way to make sure that y'all are understanding primarily the adjusting journal entries. And then of course you got using the cell referencing on Excel. But adjusting journal entries, whether the permanent account or the temporary account was debited or credited. So we'll go through those. Were y'all nervous about not seeing my face on here? It's like, oh, another professor. Are y'all mad at me? I didn't get sick on purpose. I really didn't. Okay, there should be more in the class. Oh, shoot. I threw the other one away. I'll be right back. Oh, there it is. Let's see. Okay, for those of you that don't have your webcams on, webcam is required, and even if your webcam is on, if you could make your background where it's not so dark that I can see your face. Thank you. And so we have some new rules for the class. They're pretty simple rules. The webcam was one that, we needed webcam on. And the other one is that you need to not be laying in your bed, and the other one is you need a shirt on. So you wouldn't think I would have those issues, but I guess my 8 o'clock in the morning class, I had to say, get up out of bed and then put shirt on, please. How are y'all doing? Can you unmute and talk to me?
Great. How are you? Are you better?
Yes, I am. My body has some catching up to do, recuperating, but, I'm fine. I did rest a lot yesterday. But yeah, as I was telling Abby, I've lost 9 pounds since I last saw y'all in a week. So that's how pretty sick I was. And it's not COVID. So yay for that. Hussein and Kyle, we need webcams on, please. Okay, so in chapter 2, we cover journal debits and credits, journal entries, adjusting journal entries. Of course, well, let's go through the whole thing. You've got journal entries because companies have transactions or economic events that are happening within the company. And the company has to have a system in place, an accounting information system in place to capture all the transactions that are happening or economic events that are happening within the company. And then the very first thing that we see that gets these economic events into the accounting information system are journal entries. And of course, to do journal entries, you need to know your debits and credits. Now, I assume at this point that you know debits and credits and journal entries. Then we have an unadjusted trial balance, which was that worksheet that you saw with Professor Goodwin, and we're going to see another one again today. Then once we have the unadjusted trial balance, then we do the adjusting entries. And I feel like adjusting entries, as you saw in the video that I did beforehand, the before we start video, that adjusting journal entries are typically where I have to spend more time. And one of the things that we see in the real world out there is that when I purchase insurance, for example, I can either debit prepaid insurance or I can debit insurance expense. It doesn't matter, because the adjusting journal entry is going to get me to what the balance in the accounts need to be anyway, to begin with. So that I know that we need to review and practice some adjusting journal entries that way. And then we have the adjusted trial balance, and it is from the adjusted trial balance that we will prepare financial statements. So what I'd like to do, so now let me get some feedback from y'all. Everybody unmute, please. All right, now give me some feedback on adjusting journal entries that we need to practice on, right? What else? Tell me about, if we're finishing up chapter 2 today, out of chapter 2, what else you feel like we need to work on?
Mostly just the alternative method for the adjusting entries, I think.
Okay, right, that, so those adjusting journal entries, how were y'all's Excel skills with cell referencing, preparing the financial statements from the adjusted trial balance? Like you didn't have to enter in any numbers at all. So how are your Excel skills?
Kind of strong.
Okay. Maybe not everybody in the class. So practice adjusting journal entries and Excel skills. And do y'all understand closing entries? Did y'all do closing entries?
Yeah, sort of.
Okay. All right, so let's practice those. The first thing that I would like for you to do is go to page 102. And I'm going to be sharing my screen quite a bit today because I'm going to, instead of talking at you, I'm going to talk with you while we're working problems. So on page 102 is problem 2-7. So let's look at problem 2-7 first. And I am going to bring up an Excel file. All right, and go ahead and start working. I want y'all to get a couple ahead of me so that you can assess what your understanding is and then of the material. So go ahead and work problem 2-7 on page 102, and then we will go through them.
Is it 102 in the electronic textbook too?
I would assume so. They usually line up pretty well. So problem 2-7. Where did Cole go? He was in class. Cole, did you leave us?
I just got kicked out a minute ago too. I don't know if that happened.
Oh,
to
did you?
anybody
Okay, yeah. Because that's what I was gonna. He must be on campus. He's got a mask on, and I'm looking to see.
Is this the Sanderson Hardware Company? Is that the right question?
No, problem 2-7 is on page 102. It's Vito's Pizza Parlor. Am I in the right textbook? Or yeah, intermediate. Yeah. Is it on page 102? Who has it? Somebody raise their hand. Who has it? Who sees it? Okay. So DeMonte, is it on page 102?
Yes.
Okay. Thank you. And don't forget, accountants have to pay attention to dates. We're accountants when we get into intermediate. Nasser, you just entered class. We're working problem 2.7 on page 102. So go ahead and work that problem, and then
Could you do an appointment this, on the 11th, this Friday?
where's my,
I don't have your calendar.
what did I do
You
about
may-
it? I may have left it in there. Excuse me, class. Y'all continue working on that problem.
Sorry.
I'm sorry, class. Okay. All right, so let's go over now and let's go over these adjusting entries. You may not be finished yet. Have most of you, raise your hand if you have not finished. Okay, let me give you, since it's mostly the class, let me give you a few more minutes. Let me give you about 5 more minutes, and then we'll go over those in class, and then we'll work a big problem together. Jacob, are you working on these?
Yeah, I have I think I'm on the last one right now.
Okay, cool. Claudia, what does that say behind you? She is getting a...
It says pop the bubbly. She's getting a hubby. I'm dog sitting.
Oh.
Yeah.
So someone else is getting a hubby. Well, I hope that whenever y'all do find a partner in life, that it's long lasting. I've been with Bill Bostic for 40 years. And the reason I had to leave just now, because the man, since I'm teaching all day, and yesterday was Labor Day, he's trying to get me an appointment with a GI specialist, see if we can figure out what's going on with me. He's just that kind of man, just a good man. Tyrone, we're working on page 102, problem 27.
Yeah, I got it. I finished.
Okay.
Sorry, I
I
checked
didn't
the
know if
flash.
you just had, oh, you, okay. I just didn't know if you had just come in or.
Professor, for the Alex assignment, we just had to do the initial knowledge check, correct?
Right, yeah, Abby was asking about that earlier. Just get your pie full. And once your pie is full, you should be done. I'm gonna go into it after class.
What? Sorry, the initial knowledge check and the pie slice were different, right? You do like the initial knowledge, then it creates a pie slice. And you have to,
That's right.
okay.
And then once your pie is complete, it should be done.
Is that due at midnight tonight?
Midnight tonight. No, 11:59.
All right. Thanks.
You're welcome. I am out of the hospital. Logan, you got them done?
Got them
Good.
done.
You gonna lead the class in talking about them?
I will. The one I had a problem with was A, and that's because it says on July 1/21, it's they purchase them and they also pay interest on that date. So would you count that or not?
Yeah, it's if you read it, we have invested in IBM's bonds. So IBM owes us interest. So it's going to be interest receivable and interest revenue.
Okay, even if we purchase it that day.
Well, you're making the mistake that I said to be careful about. When are we preparing the adjusting journal entries as of?
December 31. Okay.
Right. And when did we purchase them?
Gotcha. Okay. That makes sense.
Oh, accounting makes sense. That's the only thing that makes sense to me is accounting. Okay, so let's go ahead and take a look at these 5 journal entries and see how we did. And I will share my screen onto Excel if there's any that we need to, show the work on. Okay, so Logan, can you take us through what is the first adjusting entry? What did you do?
Yeah, I'm still kind of stuck on that one. I'd honestly prefer to do any of the others, but I can try. I did interest earned. I debited for 600, and then interest receivable I credited 600.
Okay, so did anybody do anything different?
I just had the numbers different. I had interest revenue for 1,200 and interest receivable for 1,200.
Okay, and what did you debit and what did you credit? Always give me my debits first. So you debited what?
Interest revenue. And then interest receivable.
All right, we've got critical problem right here, just the very beginning. How do we increase revenues, debit or credit?
Credit.
Credit. So why are you debiting revenue? In this case, right? Interest receivable, if I am accruing interest, then what would we do to the interest receivable? Debit or credit it?
Sorry, I was writing that down. You would debit it.
Right. So I'm going to go ahead and share my screen. And all right, so on the first one, we bought a bond from IBM, and they pay interest twice a year at 12%. So we know that the formula for, there we go, I can see most of y'all. We know that the formula for interest is principal times rate times time. And remember that the interest rate is always an annual rate unless stated otherwise. So it's very important to remember that when we multiply principal times the rate, that we get interest for 1 year. Okay, so let's take a look at the journal entry. Watch, do y'all see my Excel file? Excel worksheet. So what we're going to do is the amount of interest. When did we purchase the bond? On what date did we purchase the bond? I want everybody on unmute.
July 1st.
Okay, July 1st. Is everybody on unmute?
Yes.
Okay,
There's
unmute
work
someone.
going on in my house. I can unmute. There's a lot of noise, so.
Okay, just be sure to,
Yeah,
beam in.
definitely.
Okay, thank you, Alejandro. So we bought it on July 1st. Now, when are we doing the adjusting journal entries? As of what date?
December 31st.
31st.
Good, December 31st. So how many months have gone by?
7.
Let's see, we got July. So we have July, August, September, October, November, December. I think that's 6. Are my fingers counting okay? So all of July, August, September, October, November, December, is that 6 months? So we know, what is the principal? We know principal times rate times time. What is the principal?
10,000.
So I've got 10,000. Notice what I'm putting in my f of x in my Excel. So I have 10,000 times, what is the annual rate?
12%.
Times 12. And that gives me interest for 1 year. Then I will divide that by 12. Is that correct? And I'm probably putting in more parentheses than I need to because I'm just trying to do the formula as we go. So I've got the principal times the rate. Then when I divide it by 12, then I will get interest per month. And then I multiply by the 6 months. So it is $600. So we debit interest receivable and credit interest revenue. What kind of an account is interest receivable? Asset, liability, stockholders' equity.
Asset.
It's an asset. And how do we increase assets?
Debits.
Debit, okay? Revenue. Revenue, how do we increase revenue? Credit. Now, I want to stop right here. How do we increase, wait, before I stop, how do we increase expenses?
Debit it.
Good. How do we increase dividends?
Debit it.
Debit, okay? Can someone explain to me, why do we credit revenues? Why are revenues credited? So I'm gonna stop sharing and we'll come back. Why are revenues credited?
This will bring up retained earnings.
Oh, I love it. Who said that? Alejandro, good. Revenues increase retained earnings. Remember, we've got two types, and you've learned a third one. So we'll go ahead and say we've got three types of stockholders' equity. One is contributed capital, or that common stock. The second one is retained earnings. You learned that in 202. Now, the third type of the third type of stockholders' equity is accumulated other comprehensive income. AOCI. Accumulated other comprehensive income. We'll talk more about this in chapter 3, okay? But just the book introduced you to the concept pretty early on, and so we'll learn about that third. You don't know anything about it except what I just told you, and that's okay, because we're going to learn more about it in chapter 3. Well, what causes retained earnings to change? Well, let's look at the three types of stockholders' equity that we have. Common stock. Common stock can only go up. It cannot go down. It can only go up. And that is when we issue common stock. Now, accumulated other comprehensive income, AOCI, let's put that on hold until chapter 3 and 4. The third one is retained earnings. And what causes retained earnings to change? Think about your statement of stockholders' equity. You got beginning retained earnings plus or minus what?
Net income.
Good. Plus net income. Good, Nick. Minus dividends. Nice job, Claudia. Equals ending retained earnings. Okay. So we've got that. What causes retained earnings to change is we have beginning retained earnings plus net income. And net income is revenues and gains minus expenses and losses. And then minus dividends equals, and I'm gonna move, I know y'all can't see this, equals ending retained earnings, okay? So here we've got that what delta is change sign. So what causes retained earnings to change is, as y'all have already told me, net income increases it and dividends decrease retained earnings. And we know that net income is equal to revenues and gains minus expenses and losses. Okay? So because revenues and gains have what effect on net income? Do they make net income go up or do they make net income go down?
Up.
Up. Okay, so revenues and gains make retained earnings go up because they make net income go up. All right, so how do you increase anything on the right side of the accounting equation? Remember, you have assets on the left and you have liabilities and stockholders' equity on the right. So how do we increase anything on the right side of the accounting equation? Debit or credit?
Credit.
Credit. Beautiful. So because we know that revenues and gains increase retained earnings, which is a stockholder's equity, to increase stockholders' equity, and when I snap my fingers in class, that means I want a debit or credit. Okay? So to increase retained earnings, which is a stockholder's equity, we I should get no snaps in.
Credit.
We credit, right? The assets equal liabilities plus stockholders' equity. Assets are on the left, and to increase anything on the left, we debit. Liabilities and stockholders' equity are on the right, and to increase anything on the right, we
Credit.
credit, right? So to increase liabilities, we credit, and to increase stockholders' equity, we credit. So because we know, now this is where understanding comes in, because we know that revenues and gains increase retained earnings, well, revenues and gains increase net income increases retained earnings, then to increase revenues and gains, we debit or credit?
Credit.
Credit, okay? Because it is increasing stockholders' equity. So revenues and gains have a normal credit balance. Now let's look at expenses and losses. Expenses and losses cause retained earnings to go down, because the more expenses I have, the more losses I have, the lower net income is going to be. So in order to increase the, I'm sorry, I just lost my train of thought. It was looking for, anyway, to increase expenses, the more expenses I have, the more losses I have, the lower retained earnings is going to be. And to decrease anything on the right side of the equation, in other words, liabilities and stockholders' equity, to decrease them, what do? Debit or credit?
Debit.
Debit, good. So therefore, expenses and losses have a normal debit balance. You got to get your debits and credits squared in your head. I mean, it needs to just roll off your tongue just like your name does. Okay? So because we have interest revenue here, revenue to increase it is a credit. Interest receivable is an asset. And how do we increase assets?
Debit.
Good, a debit. All right. So please understand why. Don't just memorize. We did that in, well, y'all didn't remember. You may have memorized and then dumped when you took the final exam. But understand why credits, revenues and gains are credits, and expenses and losses are debits, because of the effect they have on stockholders' equity, particularly retained earnings. Does that help? Okay. All right, so let's go back to sharing the screen. And we see that IBM, as of December 31st, we've earned $600 of revenue, and they haven't paid us yet. They owe it to us, so interest receivable is what we would debit. Now, on the second one, it just told us that the equipment had a cost of $30,000, a 5-year life, no salvage value, and it had been purchased in prior years. So equal 30,000 divided by 5, because I don't have any salvage value. So my depreciation is 6,000. So how'd y'all do on this one?
I
Debit.
thought it was 12,000 because it was 2 years after now.
Okay, but remember, depreciation is calculated each year. And then remember, we close it out into retained earnings.
Okay, so that was already done in 2019. Okay.
Right, so in 2019, they debited depreciation expense and then closed it out. In 2020, they debited depreciation expense and then closed it out. Now it's 2021 and we're recording our depreciation for that year. Does that help?
Yes.
Okay. Now let's look at this deferred or unearned revenue. Oh, wait, I'm sorry, I missed this. Accumulated depreciation, what kind of an account is that?
Contra asset account.
Good, contra asset account. So what is its normal balance? In other words, how do we increase it?
Credit.
I heard both. What do we do? What did I do to it?
Credit.
Credit. It's a contra asset. Whenever you have a contra account, and we're going to have contra asset accounts, we're going to have contra liability accounts, and we're going to have contra revenue accounts before this semester is over. So a contra account is linked to another account. Like accumulated depreciation would be linked to the equipment account because this was depreciation on equipment. So we would have the equipment account, which has a debit balance, and then we would have less accumulated depreciation, which has a credit balance. So the normal balance of the contra account is the opposite of what account it's linked to. So if it's a contra asset, it's going to have a credit balance because assets have a debit balance. What would a contra revenue have? What would a normal balance of a contra revenue be? Debit or credit?
Debit.
Debit, good, good, okay? Because it's linked to those revenue account. Do y'all remember sales returns and sales discounts? Kinda a little bit. We'll be visiting those again. Those are contra revenue accounts. So accumulated depreciation is a contra asset account. All right, so now we look at C, which
Question on that one still. It's 6,000 since we're only depreciating 1 year, because like last year they did like the 6,000 from that year, and like this year it's only that amount.
right. So in 2020, they debited depreciation expense and credited accumulated depreciation for 6,000. Remember, all of your temporary accounts, revenues, gains, expenses, and losses, and dividends, the red, revenues, expenses, and dividends, and then put your gains and losses. Remember, those are all temporary accounts that are closed into retained earnings. Did y'all, do we need, it sounds like we need to practice closing entries also. Okay. All right.
I'm sorry to interrupt you. I think you might have a few people in the waiting room.
Oh, thank you. Because let me get back into Zoom. Thank you. She must have gotten kicked out. She was in. Welcome back, Abby. Welcome back. Sorry. I was,
Yeah,
you got kicked out. All right. So let me share my screen again. Okay, and thank you for monitoring that for me, because when I'm sharing the screen, I can't see the Zoom at all. So thanks for letting me know someone was waiting. All right, so let's take a look at deferred revenue. On November 1st, the bar was leased for a year, and Vito, remember we're doing the accounting for Vito, we're Vito's pizza parlor, and Vito received $6,000 representing the first 6 months rent. So they were prepaid rent revenue for 6 months. And it said that they credited deferred rent revenue. Now deferred, here, let me put, deferred rent revenue or deferred revenue or unearned, deferred and unearned mean the same thing. What kind of an account is deferred revenue?
Liability.
Very good, a liability. because we owe, if they paid us 6 months rent in advance, then we owe them rent. We owe them, I don't owe them cash, but I owe them the lease of the building for 6 months because that's what they paid for it. Have I earned that rent yet? Have I earned 6 months of rent yet the day they paid me?
No.
No, because that time hasn't passed. So on November 1st, they debited cash for $6,000, and it tells you that they credited the unearned rent revenue for $6,000. So now it's December. How many months of rent have I earned?
2.
2, November and December. And how much do I earn each month?
1,000.
1,000, right? They paid $6,000 for 6 months. That's $1,000 a month. And so how much revenue have I earned?
2,000.
2,000. So we will reduce the liability. How do I reduce the liability? Debit or credit?
Debit.
Debit, good. And increase the revenue by crediting for the 2,000. Now on the next one, we see the alternative approach. On the next one, on April 1st, they paid $2,400 for a 2-year policy. That's cheap, huh? And they debited insurance expense. They debited insurance expense. What I'm going to do is I am going to show you the T accounts. Well, I'm not going to worry about inserting the lines. Prepaid insurance, and then we'll have insurance expense. Oh, here we go. That's where it is. I want a row, I want a bottom border. And are y'all noticing how I'm doing this? My T account, I want a bottom border. And then I want a left border. And you see how I drew a T account? And then I want a left border. So now I've got a T account. And what they're saying happened, so you can see this in a T account, on April 1st, they paid $2,400 and they debited insurance expense. So they debited insurance expense for $2,400 and they credited cash. Now it is December 31st. And I need to do an adjusting journal entry. So how many months are used and how many months are unused? So we bought it April 1st of 2021. So how many months have we used?
9.
So we used 9 months, and how many months are unused?
15.
15, okay? And how much is it per month?
100.
100. So my insurance expense should have a balance of 900, right? And my prepaid insurance should have a balance of 1,500. If I used 9 months from April 1st to December 31st, and it's $100 a month, $2,400 for 24 months, because remember it was a 2-year policy. That's $100 a month. So I've used $900, and the amount that is unused is $1,500. So what should be the adjusted balance of prepaid insurance? What should be the adjusted balance of prepaid insurance?
A credit for 900.
Of prepaid insurance. Remember, prepaid insurance is that asset, which is your unused.
1,500.
Good. So the adjusted balance of my prepaid insurance should be 1,500. And what should be the adjusted balance of my insurance expense?
900.
900. Now, how am I going to get it there? Well, what is the unadjusted balance of prepaid insurance?
2,400.
Of prepaid insurance. Do you see any journal entries in prepaid insurance?
No.
No. So what is the unadjusted balance of prepaid insurance?
0.
0. And what do I want the adjusted balance to be?
1,500.
1,500. So I need to debit prepaid insurance 1,500, and I will credit insurance expense 1,500. So when I credit the insurance expense 1,500, I've got a $2,400 debit, a $1,500 credit, gives me a $900 adjusted balance. And am I happy now? Did I end up with the adjusted balances that, I'm sorry, I forgot to put my debit to prepaid insurance. So now do I have the adjusted balances that I need? Okay, this is the alternative approach, which is commonly used.
Is this what you were talking about at the beginning, which is like recognize like the bad things first, something like that?
To recognize the what?
Like it was something about the bad things, like the most, like the.
Well, what I was saying is tough was that this is the alternative approach. Like this company, and maybe I'm misunderstanding you, on April 1st of 2021, what this company did was they debited cash, they debited, insurance expense for $2,400, and they credited cash for $2,400. So this is the initial journal entry that was done on April 1st, because they told you that they debited insurance expense. So this $2,400 is what I posted into the general ledger for $2,400. Okay. So now I just need to figure out, you can look at it two ways. What should be the balance of prepaid insurance? Well, if I had 24 months and I used up 9 months, then that means that I have 15 months of unused insurance. And because I know that my insurance is $100 a month, I know that the adjusted balance of my prepaid insurance should be $1,500. And because they debited insurance expense when they bought the insurance, my prepaid insurance has a adjusted balance of 0. So I'm going to need to debit in prepaid insurance and credit insurance expense. And then I get to where I want to be. Let's suppose that on April 1st of 2021, let's just suppose that they debited prepaid insurance for the 2,400 and they credited cash for 2,400. What would my adjusting journal entry be if instead of debiting insurance expense, they had debited prepaid insurance? What adjusting entry would I do?
You're gonna debit. Oh, go ahead. No, go ahead. Whoever was just talking. Go ahead.
I'm not.
Credit for prepaid
Give me my
insurance.
debits first. We're accountants.
Sorry. Debit insurance expense, credit prepaid insurance for 900.
Beautiful. So if they had done it that way, I would debit insurance expense for 900 and credit prepaid insurance for 900. Let me use these T accounts right here to show the effect of that. And if they had initially debited prepaid insurance for 2,400, and then my adjusting journal entry is debit insurance expense 900 and credit prepaid insurance 900, what would the adjusted balance of my prepaid insurance be?
The 15.
The 15. And what would the adjusted balance of my insurance expense be? The 900. So you see how I ended up in the same place. I just have to know, how did they handle the initial journal entry? Did they debit insurance expense or did they debit prepaid insurance? If they debited insurance expense, then my adjusting journal entry is debit prepaid insurance 1,500, credit insurance expense 1,500. And I would end up with the same adjusted balances. If instead they had debited insurance, prepaid insurance for 2,400 instead of insurance expense, then this would be what my adjusting journal entry would look like. Giving you a few minutes to, or a couple of seconds to contemplate that. So you see how the adjusting journal entries are obviously different. You just have to think about, what should the adjusted balance of prepaid insurance be? And it should represent the unused portion. That's the reason it's an asset, is because I haven't used it yet. Everybody good on that one? Does that help you better understand the alternative approach? Okay, I need everybody on mute, or except if you got too much background noise, because I can't, when I'm sharing screen, I can't see all of y'all at once. So I don't know if y'all are understanding or not. And reading your faces is so important to me. So I need some verbal affirmation.
It makes sense, yeah.
Okay, so one student understands it.
Yeah.
All right, we'll practice some more of these, okay? Now let's look at, not right now, I want to get through these problems, but we'll practice more as we go along. All right, let's take a look now at the journal entry. We're accruing interest, and accruing interest, I borrowed 20,000 at 12%. And when did I borrow it? On what date did I borrow it?
October 1st.
Good, October 1st. So how many months of interest have I accrued?
3.
Good, 3, October, November, and December. So remember, interest is principal. What was the principal? Times the rate times time. And what is my time factor?
A year.
Go ahead. I'm putting in I'm doing this way. I'm just trying to make sure that y'all, okay, times 3, which is 600. So it's the principal, 20,000, times the rate of 12% times 3/12. Why is 12 my denominator?
It's for a year.
Someone needs to be let in, so let me quit sharing again. There you go, Jacob. Yeah, just send me an email. If y'all get kicked out and I don't do it, send me an email because my email does pop up and I saw that. I saw Jacob's email. All right. So does everybody get the 600? Make sure that you're getting the 600, that you know how to calculate interest. Why is the denominator 12?
It's for a year.
Good, because interest is for a year. What if this was a 3-year note? What if they borrowed the money on October 1st of 2021, but they weren't going to pay it back until October 1st of 2025, which is a 4-year note? Would my journal entry change? Say it was a 4-year note. Would this calculation change? Would the calculation of interest change?
I don't think so because interest rate is annual.
Thank you, Logan. You get the gold star for the day.
All right, thanks.
Right, you get to go. I think Jelly Belly is doing the Willy Wonka thing. Have y'all seen that on? Anyway, they've released, Jelly Belly has released a golden ticket out in Florida. And then I think George is next. I saw it on the news at 5. Where were y'all at 5:30 this morning? I was up. So no, Logan, you're correct. The journal entry would not change. Your denominator is 12 because there are 12 months in a year and interest rates are yearly rates. Okay, so now the next one is there's an 1,800 debit balance in supplies, but they only have 700 left. So what is my adjusting journal entry? How much of the supplies have I used?
1,100.
Good, 1,100. Okay, because I had 1,800, I only have 700 left. So that means the adjusted balance of the supplies account should be 700 because I used 1,100. I'm going to write up some problems, especially with some adjusting journal entries, especially with that alternative approach. I'm going to stop sharing. So if you want to take a picture of that, you're welcome to, or it's recorded. So, and I will upload the recordings. The thing with adjusting journal entries is to think about where you are and where you need to be. Compare the unadjusted trial balance to what your adjusted trial balance should be. Remember that accruals, accrued revenue and accrued expenses mean that I've earned the revenue, but the money hasn't happened yet. If it's an accrued expense, that means I've incurred the expense, but I haven't paid for it yet. The money's going to happen after. So that's where you see your receivables and your payables or in your accruals. When we have a deferral, when we have to do adjusting journal entries because of deferrals, that means that we got the money before we earned the revenue. Or if it's an expense, we prepaid the expense. In other words, the cash happened before we earned the revenue or before we incurred the expense. For example, unearned revenue. What is unearned revenue?
A liability.
Okay, it's a liability, and it's a liability because why is it a liability? What does it represent?
An agreement to fulfill something.
Okay, I owe a customer either services or a product. Like, can anybody think of an industry where you would have deferred revenue or unearned revenue? What's an industry that has deferred revenue or unearned revenue?
Airlines.
Airlines, perfect. Alejandro, that is great. You buy your ticket from Southwest, you pay Southwest, but I'm not going to fly until November. So Southwest has not earned that revenue until November. Well, when Southwest gets my cash, they have to debit cash, but they can either credit revenue or they can credit unearned revenue. And depending upon which one they credited tells you what the adjusting journal entry has to be as to whether you're going to debit unearned and credit revenue or the opposite, just like we did for insurance.
Is there any type,
Go ahead,
is there any type
Alejandro.
of benefit to like recognizing revenue first, or like?
It doesn't matter at all which way you do it, because after you've done your adjusting journal entries, your adjusted trial balance is going to look the same no matter which way you did it, whether I credited revenue or whether I credited unearned revenue. After I do that adjusting entry, my adjusted numbers are going to be the same, just like they were in that insurance that we just did. Okay, does that make sense, Alejandro?
Thank you.
You're quite welcome. All right, now I want you to go into Blackboard and go into course content, go into chapter 2, and you will see that I've uploaded a template for problem 2.8. Go ahead and download that template, and we're going to work it together.
Sorry, where was the template?
Go into course content. And I'm in Blackboard now. Let's see. Go into course content. I'm going to share my screen.
I found it. Thank you.
You're welcome. So does everybody have it?
Yep.
Give me a, who does not have the template? Okay. I'm going to open the template.
What is the name of it?
I think it's like P2-8. Do you see it in the chapter 2 folder? And it has some numbers in it. All right, I'm going to share my screen now. Okay, did everybody find it? This is what I uploaded. Is that what y'all have? Excalibur?
Yeah.
Okay. This is problem 2-8. And so to save time, I went ahead and put in the account names and the unadjusted trial balance. Abby, is this what you were talking about that you weren't used to seeing? All right. Look on page Look on page 84 in your textbooks. You see that illustration down at the bottom of page 84? This is called a worksheet. And companies, this is very, this is used. It's Excel. We have an unadjusted trial balance. When it is time, listen to me carefully because this has been an exam question that students miss. And I don't know whether it's going to be on this exam or not. But when it is time to prepare financial statements is when we have to do adjusting journal entries. We do adjusting journal entries when it is time to prepare financial statements, because we prepare financial statements from an adjusted trial balance. Now, if you look at the illustration at the bottom of page 84, you notice that that one is much longer than mine. Do you see mine just goes through column G on here and on page 84? Ignore, just don't pay any attention to H, I, J, and K. On page 84, just ignore those columns. They're more confusing than they are helpful. So when we do a worksheet, we'll just go through column G. Okay, so now we're back on page 102, problem 2-8. And we need to do adjusting journal entries. This is as of December 31st, 2021. And the first thing that it tells us is that the office equipment, the $75,000 of office equipment, was purchased in 2019 and is being depreciated using straight line over a 10-year useful life. So do you see I've got the worksheet AJEs? So let's go over to the worksheet and let's just do our adjusting entries. They're all going to be December 31st of 2021. And I am going to, what is going to be my debit and credit for number one? I want everybody participating, you know, everybody should know this one. So what am I doing?
Debit depreciation expense, credit accumulated depreciation.
Good. So we debit depreciation expense, and remember we indent for credits, and the indent is right there, and I'm going to credit accumulated depreciation. Now, how much am I going to debit depreciation expense and credit accumulated depreciation for? What did it say? My office equipment straight line over 10 years. So is equal to, watch what I'm going to do. Y'all ready? Y'all ready for some Excel technique here? I'm going to go over to my worksheet and I'm going to say, there's my equipment, 75,000 divided by 10. And then I hit enter and it gave me the number. Cell referencing, right? We know how to do that. And then I will have the 7,500 for the credit for accumulated depreciation. Now let's look at the next one. Did everybody agree with that number? Did I get it right? Because I don't have the solutions here.
Yeah.
I'm sorry, I didn't see. Did you do a formula for accumulated depreciation?
No, I just entered it in. I should have. What I should do is put, I should put dollar signs, right? But it's the same number, right? Y'all know the Command C, Command V shortcuts for cut and paste? Okay. Now let's take a look at the next one. The next one says we have accrued salaries at the end of the year, 4,500. This is easy. Let's go. This is real easy. How do we accrue an expense? Y'all are killing me. So look at number 2. This is, you learned this in chapter 2 of Accounting 202. Does that make y'all feel better or worse about yourselves? Come on, I'm playing, y'all, God, come on. How do we accrue an expense? Is this ringing any bells? Somebody jump in anytime.
Salary payable.
Yep, debit salaries expense, credit salaries payable, 4,500. Y'all know what hard coding is? The term hard coding? Whenever you look in an Excel file or an Excel cell and you see a number just typed in and it's not a formula, we refer to that as hard coding because it won't change if I make an adjustment. In your adjusting journal entries, you can hard code, but I don't want you hard coding other places. They should be self-referencing. You see how on this one I have the formula? Just for grins, what if this 75,000 was 85,000? Now I know my journal, I don't balance them, but I just want to show you, what do you think is the adjusting entry going to be once I just change that 75 to an 85? Do you think my adjusting journal entry automatically updated?
Yes.
Yes, it did, because I use Excel the way it should be. But let me change this back. All right. Now the next one I had to hard code because it's not a formula. They just gave you the number. So now let's look at number 3. The company borrowed $30,000 on September 1st, and it's to be repaid in 10 years, 10% interest, and interest is payable twice a year on each August 31st and February 28th. Now, when are we doing these adjusting journal entries as of? What day? December, good. So I need to accrue the interest. So what is my adjusting journal entry going to be? Just give me my debit and credit.
Interest expense and payable.
Debit interest expense and credit. Now for how much? What's my principal?
30,000,
What's the rate?
10%.
How many months?
It's been 4 months out of 12.
Right. September, October, November, December. So it's 4 months. So $1,000? Is that what y'all got? Don't trust me.
What page are these problems on? Sorry.
We're doing problem 2-8 on page 102, and then it continues to page 103.
Okay, thank you.
You're welcome. Did everybody get that? Principal times rate times time?
Yeah, I got that.
All right. Number 4, the company debits supplies expense when supplies are purchased. Supplies on hand at year end are $500. What is that sentence telling me with respect to the balance of supplies? What should the adjusted balance of supplies be?
The credit?
Well, what kind of an account is supplies?
Asset?
Asset. So what kind of a balance is it going to have? Debit or
I
credit?
don't have a debit, yeah.
Good. And it should have a debit balance of how much?
500.
How much do I have in supplies at December 31st?
500.
500. So what should the adjusted balance of supplies be?
500.
500. So let's go to our worksheet. What is the unadjusted balance of supplies?
0.
0. And what did y'all tell me it needed to be?
500.
500. So what is my adjusting journal entry?
Debit supplies for 500. Credit supplies expense.
Nice job. How much?
500.
Right? They use the alternative approach here. But I end up in the same place no matter which approach they use because of these adjusting entries.
Did you use a formula for that?
No, what if supplies had $100 unadjusted balance? So let's just suppose that the supplies account, instead of having 0, what if the supplies account had $100 adjusted balance? Unadjusted, sorry.
400.
What if it had $100 unadjusted balance? Then how much would this adjusting entry be for?
It would be for 400.
Good, because I want the adjusted balance to be 500. Did that help whoever answered the question? Asked the question? It was a female.
Yeah.
So you ask, what is it mathematically going to take? And this isn't higher. I am not a higher math. You want to talk higher math? I'll go get my husband, who's a chemist and a physicist. I'll get my husband in here and he can talk about higher math. Whoa, blows my mind. I do basic algebra and that's it. People think that just because I'm a CPA and an accountant and have a PhD in accounting, I'm good with numbers. I'm not. Don't ask me to do, I don't even know what they call them, logarithms. I don't know all that stuff. Forget it. I don't. Basic accounting, basic math. All right, so now let's take a look at the last one. Prepaid rent at year end should be $1,000. So I'm gonna go to my unadjusted trial balance and I'm gonna look at my prepaid rent and how much is my unadjusted prepaid rent?
0.
0. What should it be?
1,000.
1,000. So what is going to be my adjusting entry?
Gonna debit prepaid rent 1,000 and credit rent expense 1,000.
Good. Debit prepaid rent 1,000 and credit Credit what?
Rent expense?
Rent expense. Okay. Now let's post these to the worksheet. Am I going to hard code or am I going to do cell reference?
Reference.
Exactly. So depreciation expense and accumulated depreciation. So I'm going to come here to depreciation expense. I'm going to have to add it. And over here in adjusting entries, I'm going to put equal. And my accumulated depreciation had a credit of 7,500. Then my next one, so now I'm just posting, I got a salary expense and salary payable. So salary expense has a debit. And salary payable has a credit. Does everybody see how I'm doing my cell referencing and just posting the journal entries? So go ahead and post your journal entries. Interest expense. And I don't have an interest payable. So I'm going to insert a row. Oh, I bet it's in the home. And I want to, this stop share is getting, here we go, insert. So I want to insert payable, and it's a credit. And supplies is a debit. And supplies expense is a credit. Then I don't remember the last one. Prepaid rent is a debit. If you don't understand what I'm doing on the screen, please ask. Don't sit here and watch me work, because I can promise I know this really well. Go ahead.
Actually, for the adjusting entries, I couldn't do the code, the for the last three.
There they are. And are you wanting the formula? The formulas you should be able to do, it's just principal times rate times time. Now the other one wasn't a formula. These were just amounts that we could calculate in our heads. Does that help you? Was that your question? Whoever asked. All right, now I'm going to go back to the worksheet. And this is something that, looking at what y'all uploaded when Professor Goodwin, that I don't think that y'all either you didn't cover it or didn't understand. The adjusted trial balance is my unadjusted plus or minus my adjusting entries. Every debit account, every account that has a normal debit balance, assets and expenses and dividends, is going to have the same formula. My credits are all going to have the same formula. I want all eyes watching me, and then I want you doing it on yours. My adjusted trial balance is going to be 100%, is going to be 100% formulas. When you're in Excel, your calculator should be in a safety deposit box in the bank. You never, ever, never, ever, never, ever touch a calculator when you're in Excel, or you're not using Excel properly. So here I go, cash. Cash is going to be equal to the debit balance plus any debit adjustments I have. I don't have any, but I want to set my Excel spreadsheet up so that if I did have one, it would automatically update, minus a credit. So I'm going to copy this to all the accounts that have a normal debit balance. And you can drag it, you can do the Control-C, Control-V. I use Control-C and Control-V. Now here's my first credit. So I'm gonna go over to the credit and I'm gonna put equal a credit minus any debit adjustments I had plus any credit adjustments. And all of my credit accounts will have that same formula. Here's a debit. Dividends is a debit. And all my expenses are debits. And then a credit. Now, I don't know about y'all, but I'm done. I got an adjusted trial balance and the darn thing balances. So all of your debits should be this debit plus this debit minus this credit. All of your credits should be the credit minus a debit plus a credit. So every one is a formula so that if I change something, it's going to automatically update. Okay? Now, we have to prepare financial statements. And I am going to give you did Professor Goodwin give you the Bostic rules of how to prepare financial statements and they balance the first time, every time?
He was running out of time. He really flew through them.
Okay. I'm going to give you the rules. So go ahead and these are Bostic's rules and they have never failed me. And I've been doing accounting for a very, very long time. Ugh, like a whole long time. Oh, well, I love it. I'm going to stop sharing for just a minute. Okay, y'all ready? You got your pens ready? Take notes. Rule number 1. Every account is used once and only once. Every account is used once and only once. The second one is that all of the balances on your adjusted trial balance represent the ending balances, except for retained earnings. So I'll repeat that. The adjusted balances are the ending balances for all of your accounts except for retained earnings. One more time. The adjusted balances are the ending balances for all the accounts except for retained earnings. So the adjusted balances represent the ending balance except for retained earnings. Rule number 3, the retained earnings number, the adjusted balance, let me start over. The adjusted balance of retained earnings represents beginning retained earnings. The adjusted balance of retained earnings represents beginning retained earnings. You follow those 3 rules and your financial statements will, your balance sheet will balance at the end. Now, I don't know if you've put everything in the right place, but your balance sheet will balance if you follow those 3 rules. Use every account once and only once. The adjusted balances represent ending balances except for retained earnings. Number 3, the adjusted balance of retained earnings represents beginning retained earnings. Okay? Can someone explain to me, and we'll work the financial statements, save this file, and then we'll prepare the financial statements the first thing on Thursday before we get into chapters 1 and chapters 3. Okay? Chapters 1 and chapters 3 aren't bad chapters at all. Can someone explain to me why the adjusted balance of retained earnings is beginning retained earnings, not ending retained earnings? Think about, go ahead.
Because what you end the year with is what you're going to start the next year with.
Okay, so why would my adjusted balance this year be what I ended last year with, which is what I'll begin this year with? What hasn't happened yet?
The ending retained earnings adds net income and subtracts dividend.
We got another gold star. You're going to be Willy Wonka going to the chocolate factory, right? We get the golden ticket. Exactly right. Remember, what causes retained earnings to change? Net income, which is revenues and expenses, and dividends. Revenues, expenses, and dividends are what cause retained earnings to change. Have we closed those accounts out yet? Have we closed retained earnings? Have we closed revenues and expenses and dividends? Have we done the closing entries yet to close those into retained earnings?
Not yet, no.
Not yet. And so because we haven't done closing entries yet, that is the reason that the adjusted balance of retained earnings is your beginning retained earnings number on your statement of stockholders' equity. Okay? You see, this is principles with some BAMs in there, right? We've got to take what we learned in 202 and we got to jump from memorization to actually understanding and utilizing that understanding. What you learned in 202 is bookkeeping. what you're beginning to learn now and will continue to learn, accounting majors as you go up, or what it takes to be a CPA or an accountant. Accountants make a whole lot more money than bookkeepers do. Okay, so let's get past the bookkeeping and let's get into this thinking that we're going to do the whole semester. I don't want to start the financial statements now. I know we've got a few minutes left in class, but I don't want to start the financial statements now and then stop and then have to restart on Thursday. Everything that is due on Thursday is still due, because what we're going to do, finish in chapter 2, is we're just going to finish these financial statements, and then we'll get into 1 and 3 and continue with the revised syllabus. Does everybody get the revised syllabus that I sent out? Or if there was one, and make sure that you look at, I don't know if there were any new due dates or not, because we had so much time in chapter 2. I know that we missed one day in chapter 2, so I'm going to make up for that. I'm not going to just assume y'all get it. So just trust me, okay? I'll keep y'all in a safe place going through intermediate and making sure that we've got that good foundation of debits and credits, adjusting entries, closing entries, and doing those financial statements. Y'all trust me? Okay, I promise we'll work through there. So I will see y'all Thursday morning. I will upload the recording of this if you want to take a look at it. And I'll see y'all Thursday morning. We'll finish the financial statements and talk about any adjusting entries that you want to talk about. I will also work on doing some practice problems, some handouts where you're doing adjusting entries, the alternative method. I have a feel, I get that would help y'all. So what I'll do is I'll write some, some problems, and then I will have the solution in a separate file. Okay, so that y'all can get some practice at adjusting journal entries. Y'all happy I'm back? Glad I'm back? Sad I'm back?
Happy you're back.
It's like, oh no, it's Bostic. So, well, I'm glad to be back. And I'm looking forward to really sharing and getting y'all's mind deep into accounting, okay? So I'll see you Thursday morning. In the meantime, if you have any questions, just send me an email. If we need to set up a Zoom, since yesterday was Monday, Labor Day, if you need to set up work your problems, but if you can't, you're stuck. If you need to set up a Zoom meeting with me for tomorrow, just email me, okay? I don't have office hours on Wednesday, but just email me if you need some help and we'll set up a meeting. Okay? So glad to see y'all, and I'll see y'all Thursday.
Thank you.
Thank you.
Thank you.
Oh, you're quite welcome.
Professor, just to verify, all 55 concepts of the Alex is due tonight at midnight?
Yeah, you knew about that long ago.
Okay, just double check.
Yeah. It's, it takes a while to get through them. So if you remember your debits and credits, Logan, it won't take you as long because it's adaptive.
Yeah, I'm about 3/4 of the way done.
Oh, okay. So you've already done. Okay.
Yep.
Yeah. So go through those concepts and be done. Oh, good. I was concerned that you hadn't started it yet, and I was like, you've known about
that'd
this.
be a big task.
Yeah. So.
All right.
All right.
Thank
See y'all
you.
Thursday.
Have a good
You're
one.
quite welcome. Bye bye.